The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Tom's out this morning. He'll be back live for his program at 3 p.m. this afternoon. Jumping right into the markets, folks. Volatility in both directions. We got some retail numbers out this morning for retail sales. We'll jump into that in a moment. Checking in on the markets. Negative territory across the board right now. You got the S&Ps negative by 15 points. That's about 0.4% in the red, trading at 39.12. Got the NASDAQ 100 off about 135 points. That's a full percent right now at 13,634. The Dow barely negative by about 20 points, 31,440. And you got the Russell off about 1% on the dot actually right now at 2248. Got some big action in commodities. Bitcoin, how about it? Above 52,000, making new highs almost on a daily basis right now. The crude market getting a lot of attention with what's going on in Texas, unfortunately, right now. Millions without power. You have crude up to 61.26 early this morning. You trade down almost $2 full to 59.40. You're currently trading at 60.20. Gold contract pulling back $20 right now at 17.78. And we'll jump over to that volatility index. A little bit of an acceleration this morning. All things considered, still relatively low from where we've been. You get the VIX trading at 22.42 right now. Jumping over to that retail sales number, 5.3% in January. The expectation was only for a rise of about 1.3%, I believe. And what you also got is you got PPI number out. Producer price for January coming in higher than expected. The Bureau of Labor Statistics saying a 1.3% jump, highest on record for the index. We're still in earnings season. We got a lot going on. Let's jump over to our man, Kevin Hinks. Folks, right after this program, Fast Market, Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network, breaking down the markets, breaking down trading, the most wonderful time of the year. We're still in a big week of earnings. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. How are you? And you led this show with the news on retail sales and PPI. And, when a bunch of people get together and get polled on this and they come up with a consensus number, it's not very often that you see them miss by 5x on expectations for a number. The expectations for retail sales were 1.1%. For those that come in, 5.3%, and X vehicles, 5.9, vehicles and gas, 6.1. These are massive numbers in retail sales. And probably the most surprising part of the morning, Tommy, so far is bonds haven't sold off further on that. So the fact that the 10-year is now dipped back below 1.3 is a little surprising to me, frankly, because these numbers, both in the PPI and retail sales, were both powerful.
Yeah, I mean, we're sitting at quite a number from where we've been in that yield, but I agree. I'm sitting there, I'm watching Bloomberg early this morning. It hits at 8:30. I said, my goodness, right? I'm talking to my fiance. I'm hanging out with my new son. I said, and I'm explaining, my goodness, 5.3%. This is a big number. In a big way, especially looking at that expectation. Of course, we saw some of the markets reacting. We see the dollar reacting. We see yields, but not quite maybe the reaction that you could expect. Like I was explaining, the type of miss that is for somebody not in the market. You almost can't express quite a number. And I got up, the chart here. Even when you look at it, the number, quite a rise. And I think we're coming off a decrease in December, right? A decline in retail sales in December. Yeah. They were looking for a slight increase in January, and boom, we get a 5+ number in a big way. So hopefully that's something that, this economy, we obviously got to step things up from where we've been. A great indicator in a big way, and we'll see how that market reacts going forward. So, we're still in earnings season, Kevin, right? We got Shopify's out with their numbers. We got a lot of numbers. We got Buffett out with some of his purchases, man. Chevron, Verizon, $8.6 billion in Verizon, $4+ billion in Chevron. But we got a lot to talk about. What are you talking about on Fast Market coming up after our program?
Three names that we're going to be looking at today. Obviously, the biggest one will be Walmart. We'll look at that in the third segment of the show. Lifefolio is going to do a presentation on Blue Apron, a company that's been under kind of an attack and could fall into one of that Reddit category in terms of short stock and negative bets. And then the first section of the show, we're going to look at Baidu, the Chinese internet search provider. And that stock has gone up exponentially since the lows in March. So Baidu and Walmart, and a little pretation that Lifefolio is going to do on Blue Apron is what we're covering today, Tommy.
Blue Apron,
Walmart.
I was going to say, that's almost a blast from the past, Kevin. I got a chart up here of Blue Apron and that meal delivery. I've signed up for one of them in my life, Kevin, and I just wasn't using it enough. They're pretty expensive because obviously you're getting fresh food delivered to you. You're getting it sent in a consistent basis. You have to make sure you're using it, and it's just such a crowded field right now of companies that are competing for that space. Blue Apron, they kind of go public at a level. They haven't seen that level even close. I got the chart up there. They were down to $2 at the lows. We're trading at $10.86 on this chart. Now, Walmart, man, I will be keeping an eye on your program for Walmart because this one is interesting. We have some Walmart in my newsletter for complete disclosure there. Strong company, of course. They're coming out with that Walmart Plus, right? Trying to drive people in there. It's interesting. Many of the subscribers know I got a new son at home, so we're members of Sam's Club. I'll give you a quick personal experience, right? So Sam's Club, we're ordering some formula, we're ordering paper towels, right? We're ordering just a bunch of stuff, right? Stocking up. And the delivery, this is my experience, all right, is not quite up to where Amazon is. They're shipping things in it almost feels like used boxes. Amazon, they show up in those nice, crisp, perfect boxes. And I'm saying to my fiance, as a man, and I'm a believer in Walmart. In the context of relative basis, I think, I'm over here on the Analyze tab, on the fundamentals and the Thinkorswim platform. Walmart right now is talking about a $414 billion market cap. If they could do anything to compete with Amazon, you can see the gap that they can close when Amazon's going to be approaching almost $2 trillion. But I'll be watching that program, Kevin, because it's interesting as a consumer. I'm pausing a little bit. Now, the other side of that is I'm looking up formula prices. I'm looking up everything. Sam's Club blowing Amazon out of the woods, man, in terms of prices for a lot of these products. So maybe they're just fine-tuning that type of delivery process as they come in. But we'll see what happens. 153, the high on Walmart. You pulled back to a nice 38.2% retracement almost to that 140 level, You're trading about 146. But $98 a month, right? They got food delivery going on. Be interesting. Amazon needs a good competitor in the market, man. So maybe Walmart's the one that'll be the one that actually holds Amazon's feet to the fire. We'll see. They have a lot of work to do, but we'll see.
Always a great discussion when we look at these names. And like I said, I think one of the more interesting ones will be, Baidu as well. But, this will be a fun day today. Tom White will be on in the first block to help us out.
And man, that chart of Baidu, watch out, right? From $82, we're trading at $313.46, folks. I got the chart up there on the Thinkorswim platform. My goodness, watch out. Kevin, we appreciate the update, man. I assume you guys will have enough to talk about today. Retail sales, PMI, Walmart, Baidu, Blue Apron. We look forward to the program, man. We look forward to talking to you tomorrow.
Thanks for having me on, Tommy.
Thanks, Kevin. Stay tuned, folks. Come back after the break. Markets. Right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the S&P's minus by 16 points right now. I got a chart of the S&P futures up here. Just something to keep in mind. I'm always looking at Fibonacci retracement levels, folks, in the market. They're not a foolproof plan. They're just something I always keep on the radar. You look at the S&P. I mean, we are now approaching the 1 to 1.618 move of the entire move down at the beginning of the COVID restrictions. You traded from about 3,300. Give or take, what's the high there? 3,400, excuse me, of February 17th. Remarkable, folks. What's today? February 17th. We're at a full year, folks, from where that run really began in negative territory. You trade down to 2174. We're trading at 3912, just off the highs of 3959. Time is amazing, folks, right? February 17th, that's where the run really began. We were sitting at 33.9750. You trade down to 2174, the 1 to 1.618 expansion. We're talking about more than 200 points above where we are, even 200 points above the highs of about 41.57. Doesn't mean that's where the run may end. Something I just have on my radar I wanted to point out there in the markets. All right, let's jump back over to the retail sales number, because as Kevin mentioned, huge number. Something just, you beat a number like that. A lot of bright minds in the business are analyzing what they're expecting, and they missed this one in dramatic fashion. So you have retail sales surging 5.3% in January, the most in 7 months. And that's after a 1% decline in December. The expectation, as Kevin mentioned, 1.1% blows it out of the water. When you're looking for the numbers that we had, I mean, really, you have to go back to whether it was May and June, which were the first months that we really were coming out of the very strict restrictions that we began COVID with. Quite a bang-out number when you put it on the chart. We'll see if that trend continues. Now, a lot of the speculation, right, the ability to shop and eat out paired with the latest rounds of stimulus. You put money in people's pockets, especially people that need it during this period of time. They're going to spend it in a big way. So that number comes out. And what we also had, as we mentioned, and I'm just jumping around here, producer price for January also came in higher than expected, as I mentioned, a 1.3% number, the highest on record for the index. Keep that one on your brain, on your radar as well. All right, what else we're jumping around to? Let me pull it up. Where are we? I was going to jump to Buffett. I thought I had an article, but let's take a look at these two because now, full disclosure as well, my mom worked for Verizon for many years. She retired about a year and a half now, thankfully, and this is my own personal feelings here, folks. She was a member of a union. She was able to have union benefits, everything. She's able to retire at a decent age with a decent retirement. Okay, Verizon, nonetheless, she still got Verizon shares, so it's always on my radar. And Buffett steps into Verizon with an $8.6 billion position with a B. Now, Verizon, you're pushing about a 4.6% dividend on Verizon. That's as of yesterday's close. Okay, that's quite a dividend. When you look at the strength of this stock, probably something that definitely Buffett was looking into. All right, that's something that he's considering in a big way. When you're talking about yields, right, we're talking about the 10-year yield right now is at 1.28% about, and you have a company like Verizon with a dividend yield of 4.6%. Okay, now we've backed off as this market has accelerated higher. Verizon's backed off from about 62 to 54. You're up 4.6. Excuse me, you're up 4% today almost on the Buffett news. Quite a pop. That brings us back to kind of the beginning of, I was going to say beginning of January, beginning of February, late part of January. Now, this stock's just been chopping around, but man, you put this thing even on a 3-year weekly, all right, you see the trend lines forming, okay? Now, as I said, I always keep this on my radar. Something to keep in mind here. It's Verizon stock, and I've given you a full disclosure, right? My mom, she's in there. She's got some Verizon stock, okay? But, man, this is quite a trend. You look at this trend, all right? Now, the lower boundary could be down to about 52. You could see the upper boundary, though, to that level. Nice uptrend channel. This is a monthly going all the way back to 2008, 2009, okay? But I'm just giving you everything that I see on that stock because, man, when Buffett steps into a stock, and when he steps into a stock with almost a $10 billion position, you better be paying attention, folks, in a big way. The other one he stepped into is Chevron with a 4+ CVX, I believe, right? Yes, CVX. They're up 3% today on that news. They spiked to 98. You're back to 95. Chevron, you put it on the daily, chopping around a bit. We're trading at 95.89 this morning, just up to basically the highs we had in January, the highs we had in November. Now, I bring this up in particular because one of the stocks that first came on my radar because of Buffett was Restoration Hardware. Now, he took a position, nothing like $8.6 billion. It's not even, I forget actually what it was at the time. But I'm going to back this up on a 3-year weekly, okay? So Restoration Hardware, and maybe this was the acceleration in December on Buffett. I'm just speculating, but he steps into this position. I took a small position in Restoration Hardware, okay, prior to COVID. Things doing well. You traded from a price point of 90 up to 250. Everything gets sold off during COVID, down to 73. I held the position. Okay, and this thing is just pushing highs, folks, at 524. Now, what I was going to look at here, right, what I want to point out, this bottom trend line that I had up here, when I activate the drawing on Thinkorswim, you can see this point here, which correlates to October, okay? That is when I actually drew this trend line, okay? Restoration Hardware was trading then at 350. We're up another $130 since then. Now, the trend line is changing, as you can see, all right? Now, whether we activate that, and where you find this trend line, okay, but still a strong company in a perfect sector, whether you're servicing high-end customers for home decor, home design, people at home, spending more money in their homes. I pointed out, though, because this stock came on my radar because Buffett stepped into it. Anytime you have a buyer like Buffett who is going to be in a stock, supporting a stock, it's just one accolade that is basically the wind behind your sails. I mean, you see the run that Restoration Hardware has had. You jump over the Analyze tab. They got their numbers coming out March 30th. You check out the fundamentals. This company is now about $10 billion company, Restoration Hardware. And if you've seen any of their stores, they have one at International Plaza in Tampa. First time I saw it, I actually thought it was like a Hilton hotel. It was amazing. Something to keep in mind, Verizon, Chevron, I mean, $10 billion, pretty remarkable. All right, jumping around to what else we got going on in terms of stocks making moves this morning. We talked about Chevron and Verizon. You have Salesforce and Slack. Salesforce, another one. We have some action in Rocket Equities and Options. If you'd like to try it out, folks, head on over to the newsletter tab at TFNN. $97 a month, complete 30-day money-back guarantee. I've talked about this one, CRM. We had some nice trades going on in CRM. We basically started stepping into this equity, okay? Now, like I mentioned, I'm always putting the Fibonacci numbers on here, okay? A 382 retracement. We pull back from the highs of 284. We had some trades in CRM around their earnings back in August, some big numbers for them. They trade to 284. Their next earnings number, a little bit dicier, not quite what they were looking for. We pull back. We were selling some cash secured puts in this equity. Basically, January 15th, that is a Friday. Okay, we get assigned that equity. I tell the subscribers, even if you weren't in this, step into this equity and look at the run we've had, folks, up to 246 from a close that Friday of 212. Patience in the market in many aspects of life so key. We'll finish up the conversation of CRM as they're back about 100% today with the market. Stay tuned, folks. We'll be right back after the break.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets in negative territory for early trading on Wednesday. We got a question in the YouTube Tigers Den from our man Ron over there talking about Rewalk Robotics, RWLK. So jumping over to the Analyze tab, they're a medical device company. They engage in designing, developing, and commercializing exoskeletons that allow individuals with mobility impairments or other medical conditions the ability to stand or walk once again. Talk about a cool technology. Hopefully they continue to plow ahead with that technology. You pull up the chart. quite an acceleration from about $1.50 up to a high of $6. You've backed off a bit to about $4.85. One of the things I'm always looking at is volume. The last time we had some real volume in here, we're talking about that acceleration from about $2 to $3. We've seen volume again on the run we had from $2.50 to $3.50. We see some spikes here on that huge run we had. Now, these are dailies. We're just going back to 5 days ago. February 12th, you jump from $3.50 to $6. We've now backed off to $4.85. This company right now is a market cap of about $120 million. I bring that up because it's important to keep track of how small you are. Now, they got plenty of shares trading, right? I mean, you pull up and zoom it in. We're trading basically, whether it's we did 8.6 million shares traded yesterday. You back it up to last Friday, 8.6 as well. Today, we've already traded about 1.3 million. The reason why I bring it up especially, though, is because we've more than tripled the price since, I'm just backing it up to January 7th. That means you were dealing with a company of about $40 million market cap at that time. And so depending on what you're doing here, Ron, we have some great analysis in the Tiger's Den over at TFNN, talking about some of the smaller companies. Some of the traders love some of those smaller companies. I tend to shy away from some of these equities. Now, listen, the returns that you can pull on some of these equities are magnificent when you're dealing with them. But when I see a company that's only worth basically $40 million to $120 million, they're just not something that I decide to sink my teeth into usually. Now, if you're looking for an entry here, maybe you wait for this thing to pull back to the 350 price point. You chopped around here a bit. You had a little bit of support and resistance. We're talking about 5 days is all we had. You pull a Fibonacci number, which I always take a glance at, and even the run that we just had here, okay, the 382 brings us back to 450, which was nice. Okay, so maybe that was the bounce. A 618 would bring us back to about 363. If you start the run all the way back to basically the beginning of January, you're talking about a run where we just traded from 150 to 6. The 382 there would bring you back to the exact high from February 8th of about $4.20. So something to keep in mind as you take a look at that equity. All right, what else we got going on? So we got to talk about Shopify. Shopify out with their numbers, strong numbers. They're down 8%. What have you done for me lately? Could be the consensus on that one. And in terms of what are you going to do for me in the future? The market is forward-looking, folks. This company and TFNN, we use Shopify. They're a great service. They've allowed us to grow in great fashion, simple to use, easy to use. You get into what they're talking about in terms of their numbers and just pulling it because they're remarkable numbers. But guess what? They've traded from 300 to 14.99.75. You better be doing big things if you quintuple the price of your stock. And to get into where we were in terms of the numbers, check out some of these numbers, okay? Let's get it all. Revenue, $977.7 million, up 94% from a year ago. Well ahead of the estimate of $910. You had adjusted profits of $1.58 a share, nicely ahead of the expectation of $1.25. On a GAAP basis, profits were 99 cents a share, up a penny from a year earlier. Gross merchandise value, more than $41 billion, up 99% from a year ago. Revenue in the company's subscription solution business, so that's merchants paying to use Shopify's platform, almost $280 million, up 53%. Revenue from merchant solution, including payments, fulfillments, other services, almost $700 million, up 117%. I had to bring them up because it's staggering numbers. For the full year, Shopify had revenue of $2.9 billion, up 86%. Here's the part that has the market a little dicey here. Shopify did not give specific financial guidance for either the March quarter or the full year, but it did make some general comments on the outlook for both periods. The company said that in 2021, it will invest in its fulfillment network and its shop app and focus on international expansion. Sounds like they're going to be spending some money. The company said 2021 subscription solutions revenue growth will see a smaller number of merchant additions than in 2020. You can imagine, right? Everybody flocking to their business from home. It's going to be tough to mimic the numbers they saw in 2020, but the market does not like to see that you're going to grow at a slower rate in the future. The company said that revenue from subscription solutions and merchant solutions is likely to be closer than in the recent past, as we do not expect the surge that drove Merchant Solutions in 2020 to repeat. Combine that with the fact that they're given no guidance, and you better give a pause when the stock just traded from 300 to 1,500. Shopify said that it expects to grow revenue rapidly in 2021, albeit at a lower rate than 2020. And they added the first quarter will likely still contribute the smallest share of full-year revenue, and the fourth quarter, the largest. Christmas season, anytime you're in retail, that fourth quarter, you better be delivering. So strong numbers, a strong stock. I mean, we've only given back the gains we had until February 9th. Remarkable. Shopify, a strong company. But as is the case, you're seeing it. You come into the earnings for a lot of these companies. I mean, how about Disney? This is an example. We have Disney. I'm going to clear all these for a second. How do I get them all off? Clear drawing set, remove them all. And Disney comes into their numbers. They blow it out of the park, folks. And the park, no pun intended. And they trade lower. Why? Because you better believe that they were priced in to crush it out of the park on Disney when you traded from a low just on October 30th of 117 up to 193. And again, we've only given it back to almost that same area of about February 8th. But Disney giving back some of the gains, even though they basically beat every estimate you were thinking about on their earnings last week as well. We'll take a look at Walmart. As Kevin mentioned, we got Walmart coming out with their numbers tomorrow. I'm going to clear that. I love the Analyze tab on the Thinkorswim platform, folks. They are a sponsor, but if they weren't a sponsor, I would still be all over the Thinkorswim platform as my own platform that I use for trading. You jump over to the Analyze tab. They got a one-day expected move of about $5.15 coming into their numbers, I believe, tomorrow. You jump over to earnings. Yes, February 18th, Walmart's got their numbers coming out. Kevin talked about Baidu as well. Baidu's out with their numbers probably after the close today, February 17th. They're looking at an $18.70 move for a $310 stock. Now, I just mentioned it, folks, okay? When you trade from 140 to 326, you better deliver when you come in with these numbers in a big way. We'll see how they trade on their numbers after the bell tonight. And you want to see a large expected move. How about Blue Apron, okay? Now you're down to a low there of $2 during COVID. You even go back just to October 26th. They come out with their last earnings and the stock trades down to $4. We're at $10.58. What's the market pricing in right now? How about a $2.55 move for only a $10 equity? Yeah, there's a lot of uncertainty priced into that equity, probably rightfully so. All right, folks, stay tuned. We'll come back after the break. We're going to be talking to our man, Eddie Kingstat, Forex-trading-unlock.com. Good day to go. Stay tuned. We'll be right back.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The market's hanging out in negative territory, pretty much right where we started off the show. S&P's off about 19, the NASDAQ off about 172 right now, the Dow barely negative by about 28 points. And folks, if you head on over, forex-trading-unlock.com. We talked to our man Teddy Kegstad every Wednesday at 10:40 in the morning. We had a great interview last week, man, talking about $100 oil. And let's see what we got going on this week. Teddy Kegstad, you were making some waves last week in the den, man. They were going crazy with some of the things we were talking about. But boy, quite a week we've had, of course, with oil, and we got some action in the currencies this morning as well. What's happening, man?
Well, the oil thing, who knew the storm would actually help boost my little theory, right?
Oh, that's crazy.
But yeah, let's talk about what's going on with the dollar. The dollar index right now posted a little reversal buy signal, reinforcing the short-term uptrend that it's been in. We had most of the currencies were falling off against the dollar. The pound has been a very big bull. Remember, we've been talking about how it's been very oil-related and stuff like that.
Yeah, yes.
So the commodity part is definitely in play with that. And actually, to bring you guys into play on Monday, when I had a guy on the chat yesterday talking about gold, he asked me if I'd look at it. And I'm like, well, you know what? Tomorrow I'm going to talk to my guys, Tom and Tommy O'Brien, because they have a gold report. So what does gold have to do with direction right now? How do you check it out? So I was looking at the chart and I'm like, okay, so looking at this, here's the basic technicals. I'm like, but if you really want to know where the gold's going, you got to look at the yen. Okay, so if you look at a U.S. dollar yen chart, yesterday it broke out to the upside to higher move highs. So we have a higher move high now after a higher move low. We have a really nice correction to the upside on the daily basis in the yen that's been going on since January. Okay, now remember we were talking about how oil, that's a big deal with Japan. Okay,
yes.
So with oil skyrocketing, and now we know that if anyone pays attention to the 30-year, I always bring that up. That thing has fallen out of bed over the past week and a half. Now today it's higher because of the news from the reports, but I mean it spiked low yesterday. I mean it's trading around the 165 handle. That's a very low. So the yield curve is getting stretched. That's also negative for the yen. Okay, so now let's get back to the gold relationship. So when you take out the interest rate variable, which is also like a commodity, then you take out the oil variable, what's left? gold. So right now, gold is an inverse reflection of what the U.S. dollar yen's doing. So you notice that the yen made a higher move high yesterday. Gold didn't quite do it, but then it spiked through it today, making a lower move low. Okay, so if you want to know where gold's going, look at where the yen's going. Or if you want to know where the yen's going, all you got to do is look at where gold's doing today. Make sense?
It does. It does. I know Tom, my dad, he's always watching that yen. It's a great point, man. And I'm jumping back and forth between the two charts as you're talking. And a lot of inverse relationships there for sure.
Mm-hmm. So that's a nice little indicator. So as far as where that's going. So now if we leave that alone, let's look at the other currencies. So if we look at the commodity trade still, Australian dollar posted a sell signal yesterday. So it's a short term looking for just a little bit of a slide. I wouldn't expect much. I would say down to maybe the price target right now is around 75.66 somewhere on the extreme. Most likely 76.58 probably is more where it might stop at, because that's a big bull. Remember, it's commodity driven.
Yes.
Now the euro, however, that's falling out of bed today. Okay, that's why the dollar index is getting a boost today, because the pound is only slightly lower and it's coming off of a higher move high. So you got to be very careful with the pound. But the euro US dollar, I can see it getting down to the $1.19 level, somewhere around there, $1.19.5. Nothing too extreme, but definitely I would say that you're going to see dollar strength versus the euro versus the Swiss. The Swiss has had a big move to the upside today, and this has a lot to do with interest rates, So as the yield curve gets stretched, remember, it adds to the cost of carry for all commodities to begin with. So the pricing for that starts to go up, which means that's inflationary. What's inflationary mean? That means the bonds you need a higher interest rates. That's just where it's coming from, So while the short terms are staying at the top because the banks and the Fed are not lending at a higher rate, the market is dictating it. So we're going to have a lot of volatility, I think, coming up over the next few weeks to the next few months, where you're going to start to see a rubber band effect from this, because these things are going to keep getting stretched, and we are setting up for big trends. I mean, how the currencies, I like it because they trend a lot. If you look at the 30-year Treasury bond, it's traded down $20 since the spring. A $20 move in the bonds in 9 months without the Fed raising or cutting rates every month in an extreme manner doesn't make sense. So that means we're in play. We're coming to this point where no matter what, we're going to start to see the currencies swing like crazy. So dollar index is going to be a tough gauge coming up.
Nice. Yeah, I know. Some of these moves, I got the 30-year up there. Remarkable action. Basically from 184 right to 164 we're trading at. And that euro, I was getting ready for you coming on the show, man. And as you mentioned, just in the last 24 hours, right, Teddy? That move from almost 122 to 120, so 119 definitely possible. It looks like quite a bar on the daily basis, but you put this thing on a 15-minute, and my goodness, that drop-off from 7 a.m. yesterday morning, 121.69, and we're pushing basically 120 right now at 120.27. Folks, if you head on over to our YouTube channel, you can always access every interview we do, every show we do. Teddy, we had you up there last week, man. We were promoting you because that was just such a great interview. You got over 3,000 views on that view.
Really? Oh my gosh.
You just cover so much, man. That's why I'm bringing it up. I encourage people. I have to maybe sometimes go back over all those relationships you put together, because they're so important in the world we're in right now. Everything is interrelated when we're dealing with, like you're talking about, whether it's commodities, whether it's interest rates, the carry of all that. So you do a great job of walking it through, man. I'm probably going to listen to this at some point in the next couple of days. So head on over to the YouTube channel, folks. Just search TFNN, subscribe. It's free, and you can check out all those interviews. We'll get Teddy's up there as well, because it's a great education.
They can come to my YouTube channel, Forex Trading Unlocked, also, and check out things as well.
Perfect. And head on over to Forex-Trading-Unlocked.com. Teddy, man, we always appreciate the education. Boy, we got a lot going on in these markets. Forex, a big part of it, and we'll talk to you next Wednesday, man.
2021, my friend. It's going to be a lot of fun.
Perfect. All right, man. Thanks for the update, Teddy. We'll talk to you next week.
Take care. Thanks,
man. Yeah, quite the moves, folks. And as Teddy mentioned it, you can almost, lose your mind going, how far do you go down the rabbit hole, right? As in, what relationship is driving which relationship? But it's important to keep these on your radar, because we see the moves, we see the reactions in the dollar. There's a lot of talk about inflation, how that affects commodities. Steve Rhodes, he's always talking about what gold is doing, depending on what currency you're looking at, because the divergence there is dramatic, and it's rightfully so, because the currencies obviously are moving in different directions, and when you're pricing commodities in those currencies, it matters in a big way. All right, folks, we got the S&Ps catching a little bit of a bid right now, putting it on a 5-minute basis. We're popping off the lows. We're at 39.15, down about 13 points on the session. Stay tuned, folks. Right back.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the Newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps off 13 points. Pretty remarkable. February 17th, 2021. You back it up. February 17th, 2020, where the slide began. It did not take long. I got a weekly up here, folks, and we traded from 33.9750, and in the span of about 5 weeks, we were down to 21.74. We get it all back by August, and since then, we're up a solid 500 points from 3,400. I mean, you're talking about a dramatic move. Now, the reason why I bring it up is because when you start seeing headlines, folks, not this city one, not that city one, this city one, City Strategist says 10% correction in the U.S. stocks is very plausible. Folks, if you need to watch the news to understand that in this market that you could see a 10% correction and it's plausible, you better check your risk ratios, because you better believe it's possible just in a healthy move. in terms of what we're talking about, sitting at 39.15 in the S&Ps, the high at 39.59. Not that long ago, we were sitting at 21.74, folks, let alone you just back it up to the beginning of 2020, and we were trading at 32.28. The S&Ps, folks, are up 700 points from where we came into 2020, and it's barely the middle of February in 2021. So we had retail sales this morning. We had PMI data. We got FOMC minutes from the last meeting coming out at 2 o'clock today. And of course, we got a lot of earnings coming up as well. Should be an interesting day in the markets. We have the Dow climbing into positive territory as we speak. The Dow, we spiked to a low this morning, right on the opening bell, a low of below 31,280. And talk about an acceleration. We're back almost to 31,500 in the Dow. The S&P is catching a little bit of a bid as well. Lows this morning of 38.96. We're up 20 points off those lows. The highs at about 10 o'clock, 39.20. Look for a little bit of resistance at that level. Stay tuned, folks. You heard Kevin Hicks. They're going to be talking Walmart, Baidu, Blue Apron, Basil Chat, and live at 12. Steve Rhodes, Dave White, Tom O'Brien, my dad, live at 3 today. Have a great one, folks.